of coated pipes, which clocks close to around 7,000 crores for this third quarter itself. To help us out with details, we have with us in the studio itself, Mr. Vipul Mathur, who is the MD of the company. Hi, Mr. Mathur. Thanks a lot for coming down to the studio.
Good morning,
Well,
Nigel.
a few details, sir, we would like to understand. We are aware that the US business is margin accretive. So if you could give us an understanding, how much better is the US business margins in comparison to your core business? And your release is sounding very optimistic about further orders. Should we hear about more order inflows?
So US is it's a very, very profitable market for us. And we have been in that particular market for a very, very long time. We are one of the pole players in that particular market. And probably we have close to almost 20 to 25% of our market share. And these two recent orders, we have been talking about it in the past as well, that we won two orders in the past in the last, let's say 30 odd days, 30 to 45 days. And then we have been saying that we have bidded in two more projects, significant projects. And these are the two new orders which have come. Now, with these two new orders coming in, our total business, total order book for our US is close to 7,000 crore rupees. And that gives us a very clear visibility for next 6 to 8 quarters at this point in time. So we are pretty much done for 1.5 to 2 years at this point in time. On top of it, I think so the market looks very, very promising. Right. Trump is back, and he's very pro-oil. And we are seeing that traction happening into that particular market. Now, I am sure that the next 4 years are going to be very, very we are very bullish about that particular
The obvious question then is that this order win takes care of your next 6 to 8 quarters of, sort of execution. You're saying that things are looking up.
Yes.
That means that you are pressed for capacity. What exactly is your capacity there? And are you planning increased capacity because of expected order wins?
So we have a huge capacity. We have one of the largest capacities out there. On the large diameter pipe, we have close to 350,000 tons of a capacity, which is a significantly large capacity, right, at this point in time. But what happens is these projects, all these projects are large projects. They require a long gestation period before they get fructified. Correct. So while on one side we will be executing these orders, on the other side we would also be trying to work around and building the new order book around that.
Got it. Give us a few numbers then. If you're saying that US margins are better, if you could give us a number on a per ton basis, how much better is a US per ton order in comparison, EBITDA is what I'm talking about, in comparison to say your core business, if you can help us out with that. And also people are a little confused. Trump is good for your business, or, he's going to be expecting crude oil prices not to go up. So in that case, how do we view it? So first on the profitability, and then is Trump really good, or is there a bit of a gray area?
So with respect to profitability, historically, if you look at it, US business has been close to $200 EBITDA business to us.
Okay.
Which is not the case at this point in time. This time, Nigel, we have to understand this business has been secured under a very, very strategic relationship and a partnership, where the pipe supplier, the pipe buying company, and the steel supplier, all three of them came together, really worked on a comprehensive solutions and offered it to the customer. So this is a very noble concept we introduced this point in time. And I think so the margins in this business are going to be even better than what we have.
So more than $200 per ton. And say if you have to compare it with Saudi and India, how does it compare it on a per ton basis?
So historically, if you look at it, we always give a guidance that Saudi is $150 EBITDA per ton. India is a hybrid, is let's say $100 EBITDA per ton. So that's the way the profitability of the order book stands. Coming to your next question, is Trump good? I think so in his first term, he was phenomenal. We have seen, he believes into deregulations. He believes that, the oil and gas industry need to be given, they need to be unshackled. Yeah. They need to grow. And we have seen, a substantial, business uptake during his first tenure. Right now also, what we hear and what we are seeing and what the ground we are seeing is a reality like that. So we are very optimistic about that.
What about, the two things? One is your domestic capex. How is that coming along? Because you have US and in Middle East business, which has a fair amount of orders. What about the India business? And secondly, with all of this execution underway, you will have a debt number, right? At what level does the debt peak?
So two things will happen. US business, very secured for the next 6 to 8 quarters. Our Middle East business, almost 2 years of clear visibility. On our India business is oil and gas and DI. DI has a 1 year of a clear order book at this point in time. India oil and gas business has more than a 1 year of a visibility. And on top of it, the India oil water business, the domestic business, I think it has been a little muted Q2 in terms of infrastructure spending, but we are seeing that, now that seems to be coming back. So we will see a traction of government spending coming in Q4 and all that stuff. So we see that, this business will also grow. So all in all, if you look at the US business, our Middle East business, the DI business, the India oil and gas business, and the India water business, all of them are going to fire full cylinders at this point in time. So it is going to be all about execution. And I'm very confident that given our track record, we will not let anyone disappoint.
What does the debt peak at?
So we are doing certain capex. Our capex is happening on the Syntex side of it. Our capex is happening on the Middle East. We have announced 2 new greenfield projects, which is the DI pipe and the LSAW.
Yes.
And we have also announced a new plant, HFIW plant in America. I think so. This given the total capex, I think so we will still be under a net debt to EBITDA maybe less than around 0.5 to 1. But you have to understand that all these businesses are now going to generate a sufficient free cash flow. So you might see a little uptick onto a sort of a net debt number over in a 1 or 2 years time. Okay. But eventually over 2 or 3 years times, we will be a net cash company.
Got it. Next 2 to 3 years. So in the 3 years time, given this big capex as well, you'll be a debt-free company, say in 3 years from now, right?
Yes.
I want to focus on Syntex. Syntex, you were spending roughly around 2,000 crores. And now you're getting into plastics as well. Syntex was into tanks. You're saying the plastic space, maybe some of those businesses which are already listed are getting a good multiple. So you'll have gone forayed over there as well. It looks like an ancillary business. Right. So what is the revenue potential of Syntex? Because the street is quite excited about this, point number 1. Revenue potential, margins, and will you look to demerge it and list it separately?
So Syntex is a great acquisition. I mean, it is an iconic brand, as we all know about that. I think so it's a great acquisition what we have done. Typically they are into the water storage tank business. They had lost market share in the erstwhile dispensation. I think so we are building upon that. It's a journey. We are gaining our market share and it will happen eventually. The other area we think that the maximum growth potential is going to be there in the pipe business side of it. It's a huge market segment and it has a potential for a very large conglomerate, brand or conscious conglomerate to come and have a play into that. And that is why we are foraying into that. We are investing, we have announced an investment of almost close to 2,300 crore rupees, but that's going to happen over the next 2 to 3 years' time. It's not going to happen tomorrow. It's going to happen over 2 to 3 years' time. We have already done a soft launch for the pipe. We have acquired a company called VTech. Now we are doing a soft launch of the pipes out of that. I think this is a business we are going to build upon that. Our focus right now is very, very clear. That we have to create a very strong fundamental to this particular business. Because this is a business we will have to thrive. This company will thrive on a very strong fundamental. I think so we'll want to invest time in terms of building up the blocks, fundamentals and processes and build upon that.
On time. So if you could give us what your target in terms of revenue, margins and demerger on Syntex is.
Syntex, is it 2x? I mean, if you could give us at least an asset turn. You said 2,300 crores. So what is it?
I mean, the asset turn ratio would be at least 2. There's no doubt about that.
4,600 crores.
I think so it will be between 4 to 5,000
crores. Operating profit?
Operating, it should be in the mid-teens.
Mid-teens?
It should be in the mid-teens.
And the third part?
Demerger.
The demerger. I mean, see, at the end of the day, we are all here to create value for our stakeholders. Whatever is best for them, we will do that.
So up until the 2x is achieved, no demerger. Let's put it that way.
We have to grow to a size and scale before you really bring intrinsic value on the table. So that's what our intent at this point in time is.
Okay, you're telling us that US is sold out. You're saying Saudi as well is sold out. India business, parts of the business sold out for the next many quarters. So let's talk about FY26 because FY25, the guidance EBITDA that you've given suggests it's going to be more or less flattish on a year-on-year basis. So can we look at say a 25-30% growth in the EBITDA number for FY26 in comparison to FY25? We're trying to push you for a number here, sir.
I don't want to put the cart before the horse, but at the end of the day, we have already said that this company, first we want to create absolutely strong fundamentals which have been created. I think so we are very confident of a 15% CAGR growth on a year-on-year basis. And I think so as we conclude our business plan exercise and we'll come back with the new guidances, but we are very confident of the growth, scalability and profitability and predictability from here on.
So what should the growth be, the EBITDA number? 15 to 20% compounded growth on the EBITDA front?
Don't push me. I'm sure that, we would not disappoint the street. Don't worry about it.
All right, we'll have a longer conversation at another time when, you can give us some of the numbers. But so far, it seems like, you are optimistic, on track for growth itself across all your functions. That's the management of Welspun Corp. The stock doing well in today's trading session.